And first up, on GST, Santosh, there's a lot of chatter around GST on luxury cars. Now, a 40% tax rate, that looks quite likely at this point in time. But there's also a talk of higher-end EVs moving up from that current 5% slab. Do you see that possibility materializing? And how would that impact your product strategy?
So let me say the following, and thanks for having me on the show as well. Good morning to all the viewers. Historically, India has a very high taxation, and even after the GST, luxury cars were taxed more than 50%, I would say, including cess. We all need to remember that the states tax these cars 20% additionally. So technically, a car has almost 70% tax by the time it reaches on road. And what happened is, over the many years, the luxury segment has just been 1% of the total market. But if you compare now our car pricing, from Germany to the cars that we locally produce in India, India is one of the most expensive markets to buy cars because our ex-factory price is cheaper compared to Germany, but the on-road price is 20% more expensive than developed markets. I think there is a big potential for the government to correct this anomaly to some extent by bringing the slab at 40%. But more importantly, it takes away all the complexities in the tax structure. So that should definitely drive market and drive demand. Coming to the second part of the question on the EVs, I think it was important for India to continue this 5% GST on EVs to drive decarbonization. Our penetration from 1 to 2% has gone up to 8%, which means 8% of our sales that we sell in India are EVs. Now, is it the right time to increase this 5% for luxury cars to whatever slab? I would still say a bit too early. The biggest impact will be on entry-level EVs. There, as far as Mercedes-Benz is concerned, we don't participate much. Most of our EVs are in the top-end vehicle segment. Maybe there is a propensity for customers to absorb it, but we would still advocate that there should be a clear difference still between the GST on EVs to the normal combustion engine GSTs. It would take a couple of years more for consumers to shift to a decarbonized mobility, and that should also continue for some more time.
Interesting. And I was just wondering, Santosh, that irrespective of these high taxes, that doesn't fizzle out the demand at all, right? Even for Mercedes or for that matter, any other car, we just had a flash saying that, Tesla on its debut itself has had 600 bookings. Demand robust?
But, exactly. But that's a way to look at it. You can look at half glass full or half glass empty. We do close to 20,000 cars in India, but in the global scheme of things, we do 1.8, 1.9 million cars. So there is still a lot of runway to go. The car penetration is still 24 to 25 per thousand compared to the 500 odd in other markets. So that's what the story of India would be in the future. Do we have the infrastructure to support it? Maybe. Therefore, I think it's good that there are taxes. To some extent, it's calibrated growth, and at the same time, the infrastructure would also catch up. So there is clearly a very positive outlook when it comes to the future. And on the demand side, it is only because of GST that we saw August a bit muted. But when you look at inquiries, consumers wanting to buy cars, there is still a lot of pipeline. They are all waiting for the GST announcement. And hopefully, not only for luxury, but even for the automotive industry, we will have animal things coming in. This should be the best ever festive season in years to come.
I remember, Santosh, once you had told me that it's called Merc up north and it's Benz as you move to the southern parts of the country. So up until now, what's the demand feeler like? What sold more, Merc or Benz, or all of it has done well?
So that's a good question. Up till now, it's Benz because, Ganesh Chaturthi was more on the south or on the western part of India, and Onam in Kerala. What we saw in Kerala is consumers still bought cars, at least Mercedes-Benz cars because of Onam. There was this entire GST topic, but still you could see a good consumption there in South. The Merc will start kicking in, I would say, after the Shraddh, which is on 22nd of September, wherein hopefully there is a good news of GST coming on 4th with the slabs reducing, and then we could see a significant demand from the 22nd till 31st of October. We have also incidentally announcing our own retail, a festive campaign today. It's called the Dream Days. This campaign enables consumers to buy Mercedes-Benz cars at not only lower EMIs but even deferred EMIs. So there are many new products, financial products that we are introducing this festive season for consumers to shift into their dream car as a Mercedes-Benz, be it a Merc or a Benz.
Right. So, but then what happens, and that's very interesting that, you know, you have this EMI scheme as well going, and more importantly, deferred EMI as well. But should there be this 40% higher tax, Santosh, that the government does announce at the GST meeting, is that going to really impact demand?
See, we have to calibrate our expectations as well. Ideally, the taxation should be same as the automotive market. So if there is a consideration of 18 and 28%, we would argue that let's keep it simple. Let's keep the 18 and 28. Now, for the 40%, we can fully understand a bit of political compulsions. Also, end of the day, this entire segment is just 1%. For 52,000 cars sold in a year, how many different tax slabs you need to have? If the tax slabs are bought in, and if there are more number of cars, and it's the same argument, you will sell more, the GST collections will be much higher than keeping these taxes at a much higher and a prohibitive rate. So, the first step is welcome. Today, the tax slabs are at, including cess, 48 to 50. It coming to 40 should definitely help. But ideally, reduce complexity, keep the rate simple, keep a 5% for EVs, 18 and 28% for cars, and then let the market decide based on consumption. And I think that would actually also make the overall market a bit more competitive and also grow the market significantly.
Okay. There's only that much conjecture that one can do on GST rates. We'll chat again soon once the rates get announced and, that get a better sense. But tell me, what about the Mercedes-Benz strategy right now? I recall you saying on public platforms that in the next 3 to 4 years, you do see 25% of your volumes and sales coming in from EVs. How do you see the mix between EV and ICE engines pan out in the years to come?
So, as I said, year on year, we have been doubling our EV penetration from 2 to 4 to 6 to 8% now, and it's still growing. But this growth is a bit dependent on the arbitrage on GST on one side, but also states. Most of the states in India offer a 0% road tax on EVs. And that makes the EV a very strong, compelling TCO argument, even in the luxury segment. So this growth should continue. Having said that, not only in India, but also in Europe, we are very clear that we will allow the customers to decide. Every Mercedes-Benz will come with a combustion engine counterpart. We will wait for the market to evolve. Therefore, when it comes to taxes, yes, ideally it should be lower than combustion engines, but even if it changes, there would be a significant impact we can see on the demand as well. So I think we are not going with a target-based approach, but more and more offering more and more products to the market and let the customers decide the pace of transformation.
What are the new innovations that are happening? Any new launches in the offing?
So we already committed to 8 launches. We have done 8, but doesn't mean we are going to stop. We are still trying to get the new CLA to India by end of the year. That's again an electric car platform launched in Europe, high in demand as well. So that's something that we are looking forward to, and surely we will continue to excite the market. The Dream Days campaign that we introduced today now, I think this is the first time I am sharing this. We will be announcing it also in a couple of hours, is again a campaign for the first time offering very unique financial products, much more tailor-made for India. As I said, this EMI story is one way, but the rich in India also get payments by dividends, by bonuses at different period of time. So can we not have a product which enables customers to own a car and maybe pay at the time when they get these bonuses or dividends? Or alternatively, Indians want latest cars. So for example, they are all waiting for the new S-Class. So we said we'll offer a key-to-key campaign. So you buy the current car and in 2 years, upgrade to the new car whenever we launch the new S-Class, so that you don't need to wait. So very innovative financial products tailor-made for India to drive consumer sentiment and demand as well.
Must say, very curious, who is it that you've tied up with for, these EMIs and financial schemes that you just talked about?
So, very few know that we have a NBFC in India called Mercedes-Benz Financial. It's a more than 10,000 crore right now. The book size is 13,000 crores in India. 50% of the cars that we sell are financed through financial services. And they are they are a boutique financial company only for us to serve Mercedes-Benz customers, and they develop these unique financial products which are able to cater to this specific market-specific requirement. So it's our core, our own in-house financial company called Mercedes-Benz Financial, which is doing this these kind of programs.
Innovative strategy, I must say, Santosh, and we will definitely get in touch with your financial arm too. They would have some great insights on consumer behavior.
Surely. Thanks.
Great speaking with you, Santosh. Thank you for your
Thanks
time.
a lot for having me, and look forward for the announcements. Thank you.
Okay. Well, the beginning of the month often marks key financial activities, salary credits, bill payments, planning expenses, all of it. But